The federal debt cannot be managed without some significant degree of monetary debasement, cheapening the dollar so that the debt is paid off in dollars that are worth less. There's absolutely no doubt. It's a simple mathematical exercise. So people really need to be ready for that.
Hey friends, welcome back. I have Brien Lundin on the line. He is the publisher and owner of the 44-year-old Gold newsletter. He's also the owner and producer of the New Orleans Investment Conference, which just celebrated its 40th anniversary. His website is goldnewsletter.com. And I'll tell you what, guys, that investment conference is a big deal. In 2014, they had Alan Greenspan, Kyle Bass, Peter Schiff, Doug Casey, Mark Faber, just to name a few, as guest speakers. And Brien Lundin is here to break down the very, very latest in this rapidly changing gold and silver market. Brien, welcome.
Great to be here. Thank you.
Hey, it's a real thrill to have you. I have to tell you, Brien, I believe that when this train finally turns around and the brutalization of gold and silver prices stops by the hands of the cartel will be the very ones who will turn to mining companies as we see mining stocks rocket much higher along with the prices of gold and silver. The smart money will leverage mining stocks. So here's my question for you right out of the gate. Against the backdrop of a quickly deteriorating global economy, what is your near-term and long-term outlook for gold and silver prices, Brien?
Well, the near term is harder to judge because no matter what you come up with, something derails it. And I think you're right about the price getting smashed by the Western speculators and their shorts. And I think what you see right now, literally as we speak, is some short covering from those Western speculators. But short term is difficult. I would agree that we're bouncing around a long-term bottom right now. The question on everyone's minds is, when is the turn going to come? No one really doubts that it's going to come. And I think that the global economic and geopolitical forces that are turning bullish for gold really determine or necessitate a run higher in gold prices sometime this year or the latest next year. But precisely when is really hard and frankly impossible to figure out and to predict. The other part of it is we keep coming, analysts and pundits like me get paid to come up with reasons why the metals are going to turn. But historically, quite often, gold moves higher or lower for reasons that no one really expects. They come out of left field. So there's a good chance that for whatever reason, whatever sparks the next run higher in gold, it's going to come from an area that no one or very few people really expect. And as far as timing, this year or next, but I don't see it going past next year. It really does have to turn higher for reasons of monetary reflation, for reasons of mounting debt that necessitate some degree of monetary debasement, primarily in the U.S. dollar going forward.
I want to ask you this about silver specifically. So many of the pundits that speak openly about the debasement of currencies globally and the potential for hyperinflation of the dollar and other currencies, the yen, etc. Of course, we've seen what happened in Zimbabwe. So many of you guys talk about gold specifically, the money of kings. How about the money of the common man, silver? And the reason I ask is not only because I and those of us listening to this conversation are big silver bugs. We think it is tremendously undervalued. It's a commodity and so much more. It's an industrial metal as much as a monetary metal. I'm seeing today as we have this conversation, we're recording this on the 18th, gold is moving much higher, back over 1,200, 1,750 it's up. And silver, of course, is up 15 cents. If you look at the charts, they mirror each other. They always mirror each other, and it always surprises me, Brien, because this cartel has thrown billions of ounces of paper at the silver market to try to keep that price down. So I'm always fascinated when gold moves higher. Take a look at that silver chart. They truly do have a monetary metals relationship, don't they?
Oh, absolutely. And silver is the poor man's gold. It's the way to leverage gold. It outperforms gold to the upside and to the downside, which of course is where the danger is. Yeah. Much more volatile than gold, runs in the same direction as gold, but it is a way to leverage those moves without having to buy riskier options or whatever. It's also important. I mean, it's important in a number of ways. I think the industrial aspect of silver is a bit overstated. I think that at any price for silver over $8 or $9 an ounce, the monetary factor, the monetary role of silver really takes preeminence.
Mhm.
And that's where you have a monetary premium for silver. Silver is so widely produced as a byproduct of base metals production that that level of production tends to supply the industrial component. So anything over 8, 9, even $10 an ounce for silver, that the rest of that is really a monetary premium, and a deserved, in my opinion, monetary premium for silver in these ages. That you brought up the point that it is kind of the common man's precious metal, and you know, launching off of that point, I think the physical silver is a very important way that investors and savers need to build their core holdings of physical metals, and silver offers that ability. If you're going to put money into precious metals, you have to look at it as an insurance, and an insurance against anything that might happen. A lot of people buy precious metals because they think that the monetary system will break down at some point. I don't have a firm belief in that, but still, I think that people need to have precious metals that guard them against that possibility. And silver is able to do that because you can denominate it in smaller forms than, for example, with gold.
Well, let me ask you this, Brien. You mentioned $8 or $9 silver. Anything beyond that is sort of a monetary premium. If
Yeah.
we take a look at the 5-year chart of the Huey, we know what's going on here with the mining companies. They've been absolutely decimated, and so many of the
Right.
silver companies specifically have truly been gutted. What we're seeing, I think, if we look out at the future, is a situation where there are precious few primary silver mining companies. I wonder, especially when so many of these mining companies have said that their per cost ounce, when they include their capital expenditures and investments and all of their infrastructure, is closer to $17, $18, $19. Some have said more than $20 an ounce for silver. What does the future hold? Will there be a supply problem for silver? Because without any primary silver miners pulling the stuff out of the ground, especially when we know the real world tangible silver to gold ratio is roughly 10 to 1. I mean,
Yep.
really, that's about the rate at which they pull it out of the ground. Meanwhile, you have Wall Street with their paper manipulation putting the ratio closer to 70 to 1. So, something's got to break here. So I guess my question is, what's going to break? And when it does break, what does that mean for the silver price?
Yeah, there are a number of primary silver producers right now that are losing money on every ounce of silver that they produce, and trying to, as the old adage goes, trying to make it up on volume. Um, they can't do that. Now, I don't believe that that's going to create a silver supply problem in the near term, primarily because I expect that silver prices would turn up or will turn up before that really becomes a problem. Uh, and there is so much of silver production that comes as a byproduct. So, or as a credit, for base metal production. So I don't see a supply problem. I do see the price turning around because I think that we're at a bottom for gold, and silver will follow gold regardless of any supply or demand fundamentals, really for the monetary reasons.
All right, I want to ask you about the potential for inflation and hyperinflation. I'm getting very concerned about it. I think anybody being honest about the situation with the dollar is getting concerned about it. I mean, I know the dollar is still the world's reserve currency technically, but we see these other nation states de-dollarizing. Here's my question for you as it relates to the economy, as it relates to secret trade deals like the TPP, as it relates to the current administration and future administrations, as it relates to inflation and hyperinflation. What is going to save us in this country from a worst case scenario when it appears that those who are supposedly our representatives in government are aligned against us and against our interests? What's going on here? What chance do we stand, Brien?
Well, I think the current administration is ideologically hell-bent on pursuing policies that are destructive to U.S. economic growth. Uh, Destroying the U.S. economy may not be their intended consequence, but it is the unintended consequence of the ideological policies they're following. But I think that the bottom line is that the U.S. economy is so dynamic that even despite everything that they're doing, that is the precise, in almost every instance, precisely the opposite tack that should be taken to promote economic growth, the U.S. economy is still growing. So getting these guys out of the way simply will really foster, I think, fairly strong economic growth because of the dynamism in the U.S. It's still the world's leading economy. It still is the bastion of freedom. It's still the best house on the block, no matter what happens to the rest of the neighborhood. So I think we'll still have economic growth, or we will get renewed economic growth once we get this administration behind us. Now, of course, the downside is if we have a Hillary Clinton administration, a lot of these policies will be pursued still, and at that point, I think we'll be in real trouble.
Yeah, I think so too. And once we get in real trouble, the IMF will step in or the World Bank will step in, and they'll try to tell the American people that we need a bailout from one of these global central banking operations. And it's a little scary too, because if you look at what's going on in Greece, it's being reported that depositors yanked 2 billion euros out of the banks in just the past 3 days because confidence is, of course, absolutely falling apart. And when confidence goes, the currency goes.
Right.
So I know there's a lot of confidence still in the dollar, but there's no way that the dollar paradigm survives another 40 years.
Well, the default and devaluation is the standard recipe to rescue a nation from crushing debt loads, and that's what's going to happen in Greece. That's why it has to exit the euro at some point. There's really no option for it, and the U.S. faces that same recipe. We'll have to employ that same recipe. The question is only in terms of degree. If you look at whether the dollar will default, in historians looking back at the grand sweep of history will say that the dollar had already defaulted from 1966 to date, when they first took silver out of American coinage, or since they took silver out of American coinage, the dollar has lost approximately 90% of its purchasing power. Historians will look back at that as a default, but we just sit back like, the water's getting progressively higher and higher, but we're not boiling yet. So it's just a matter of degree and how you define default, whether you say we've already defaulted or whether we're just in a slower process. I think the process is going to accelerate in the coming years because frankly, it has to.
Yeah. I couldn't agree more. I think Catherine Austin Fitts has referred to it as the slow burn, and she's certainly been right about that over the past few years. But I think that slow burn is very rapidly turning into the boiling point. And it's going to be too late for many of our friends, neighbors, and colleagues to hop out of the pot because they are just being boiled alive like frogs. Your point's a great one. The dollar's already been debased. Well, Brien, if I may, let me ask you this. I know you charge money over at goldnewsletter.com. That's the model, and I appreciate that. But since I have you on the line, would you be willing to give us a pick or two for any of the listeners who might be ready to wade back into mining stocks? If you look at the Huey, if you look at the opportunity ahead, I know the bad guys are going to be making their money on mining stocks. Any picks you want to throw out there for us?
Yeah, I follow a number of companies in Gold Newsletter, and we've gone through a period of a little bit over 4 years now where the mining stocks and the metals have been going steadily downward. But in a bull market, when the turn comes, Gold Newsletter's proven to outperform many others and is really among the leaders in performance and finding these stocks that really profit during an upturn. And so we have a lot of companies we recommend. I've been particularly impressed with First Mining Finance because I love their business model. We started actually at Gold Newsletter with Jim Blanchard, kind of started the whole idea of banking mineral resources in a down market with Silver Standard and another pure silver play back in the early 90s. And it's a valid concept. And what Keith Neumeyer has done or is doing with First Mining Finance is being really agnostic of the metals, but primarily looking for precious metals projects, resources in the ground, and banking these at the bottom of the market. The mining stocks leverage the moves in the metals, and that starts with the big producers and works its way down toward the exploration companies, which provide leverage on top of leverage. So if you really want to get an outsized response to a recovery in the metals, you go through mining stocks, and then you go to the exploration shares. Keith and his team with First Mining Finance are taking that to a whole nother level by finding these resource projects that only need a little bit more drilling or need to be drilled to have great drill targets or have identified resources in the ground in safe mining jurisdictions, primarily in the Americas, and picking them up when they're unloved and cheap and just sitting out there for really pennies on the dollar, compared to what their value will be when the market turns.
Yeah, I'm going to get Keith Neumeyer on the line to talk about all of this stuff. Brien, you've been following the markets for a long time. We see these crashes come every 7 years. Sometimes we need to be shaken from our stupor. I mean, we've been absolutely stupefied by the power of the cartel, because at every turn when we think it can't get worse, it gets worse. Every time we think silver can't plummet through 24, it goes to 20. Every time it can't break 20, it goes to 16. It's not profitable. So these guys are really hurting, and I think that when the cartel finally relinquishes the paper games, and they have to, because we see India is on track to import 33% of the world's physical silver supply in 2015. The paradigm's changing. So these guys, the magicians on Wall Street, cannot keep this up forever.
No, I agree. And in fact, I had Alan Greenspan for our 40th anniversary conference last year, New Orleans conference, and I'm so confident that we're at a bottom right now in the metals and mining stocks. And I'm so confident that this is the time when people are going to really lay the foundations for fortunes over the next 3 to 5 years, that I'm focusing this year at the New Orleans conference on experts who can give you practical advice on how to take advantage of this major shift in the markets. So I still have some of the geopolitical speakers that everybody likes to hear from, and some new ones. But I'm really focused on very smart people, even some Main Street or Wall Street analysts who are turning toward gold and seeing the opportunity. Some of the more notorious contrarians on Wall Street, who are really respected for their views. Guys who don't look at gold like we tend to do, as kind of as gold bugs. We're kind of in love with it, and it's kind of semi-religion for us. But these guys who look cold-heartedly at the markets and are contrarian, who are saying, gold is going to be the place to be over the next few years.
Yeah, and I know you had Greenspan at your last conference, and correct me if I'm wrong, but I think you asked him, what will the price of gold be in the future, say 5 years out, and he said measurably higher. And the other thing that he admitted to when you had him there at the conference is that he said the Fed basically cannot exit, they can't raise interest rates without a market event.
He said that in a private conversation with me, and he also admitted that the debt in federal liabilities problem is much greater than anyone thinks it is, and much greater than anyone can really calculate because of Dodd-Frank. We're now backstopping all of the too big to fail institutions. And if anyone's followed that issue, it's not only the big banks that are being pulled into this too big to fail category, but even large insurance companies, etc. So we're backstopping all of these institutions, and no one really has a handle of what their derivative liability, for example, may be.
Yeah, absolutely. And I think it's far worse behind the scenes than anybody thinks. I've often said, Brien, that behind the scenes, behind the curtain, that's where the real drama is happening in the boardrooms at JP Morgan, Goldman Sachs, over at the Fed, the Treasury. These people are trying to keep this thing stitched together as the world wakes up, as other nation states wake up, as other nation states say, we want to repatriate our gold, give us our gold back, New York Fed, as Texas says, give us our gold back, New York Fed. You don't like it? Come and take it. I mean, the world, this paradigm is absolutely shifting. And you've said, if you think things are going to get worse, you buy gold. And I think things are going to get worse. And I don't think there's any better example of that than the current state of the global economy. This economy is falling apart as the Fed tells us unemployment's at 5.5%. It's ridiculous.
Yeah, you don't really have to look too far. I mean, well, right now we're in a situation where there's the chance that second quarter GDP will post a negative number. If that happens, we're in the technical definition, within the technical definition of a recession, and there's no way that the Fed is going to start hiking rates. In fact, they may feel compelled to start more quantitative easing. You can look at the whole issue of the economy and everything going on in the world, the global economy, the geopolitical issues, and have an opinion on it, but really it's a mathematical exercise. The level of debt in the Western countries and the level of debt in the U.S. alone is so high that it just can't be managed through growth, through tax cuts, through spending cuts. That's just not going to happen. The federal debt cannot be managed without some significant degree of monetary debasement, cheapening the dollar so that the debt is paid off in dollars that are worth less. It's the time-honored way that governments have handled debt throughout the millennium. And it's going to happen again. There's absolutely no doubt. It's a simple mathematical exercise. So people really need to be ready for that.
That's why we have these conversations. The whole point of these conversations is to help educate our friends, neighbors, and colleagues, because time is running out, guys, and I know you know that. But please like and share this interview with others. It's not too late to wake people up. It's just almost too late to wake people up. Brien, can you tell us a little bit about the next investment conference or anything else you'd like to share with our listeners?
Absolutely. We're just locking down our speaker roster now, and it's really one of the best we've had in many years, and I think one of the best you'll see at any investment event around the world. We've got Mark Stein, who I think is the modern-day H.L. Mencken, and just a brilliant commentator. We have Charles Krauthammer, who's wildly popular of our attendees. We have Doug Cass, one of those Wall Street contrarians I mentioned, who is turning positive on gold. We have Dr. Mark Faber. We have James Rickards, who's really like the insider's insider. We have Peter Schiff. We have Dennis Gartman. We have Doug Casey. We have Rick Rule. And the list goes on. We have a couple potential surprises that we'll be able to spring on people, I think, over the next few months. But I really think this year's event is going to be a sellout because of all of the issues that we've just discussed. So people really need to lock up their participation right now.
Yeah, and what's the date on the conference, Brien?
It's October 28th to 31st this year. It actually ends Halloween night. And if anyone's never been to New Orleans and the New Orleans French Quarter on Halloween night, it's really an event, a bucket list thing to experience. So it's going to be a great event this year. We've got a lot of great companies coming for our exhibit hall, a lot of really smart investors as attendees, and undoubtedly the best lineup of speakers and experts, primarily in precious metals and mining stocks that you'll find anywhere.
Brien, last word here. How do people subscribe to your newsletter? Do you want to tell us a little bit about that?
Absolutely. They need to go to goldnewsletter.com and they can subscribe there. And at the very least, they can subscribe to our free e-letter and watch some videos for free of Alan Greenspan and the like if they sign up for our free e-letter at goldnewsletter.com. And to learn more about the New Orleans Investment Conference, they can either go through goldnewsletter.com or to neworleansconference.com.
Terrific. Guys, our guest has been Brien Lundin, the publisher and owner of the 44-year-old Gold Newsletter and goldnewsletter.com. He's also the owner and producer of the New Orleans Investment Conference. Brien, thanks so much for your time.
Great to be here.
Great to have you. And guys, thank you so much for tuning in. Thanks for your support at sgtreport.com, thelibertymill.com, and thephaser.com. Real news 24/7. Have a terrific week ahead. Thanks for listening.